A very warm welcome to the Booms and Bust Show. My name is Jonathan Davis. Good morning, good evening, good afternoon. Well, what a week. Catalonia, Saudi Arabia. And on this day in history, as in last week, we got the first interest rate rise in the United Kingdom in over 10 years. If that's not historical, I don't know what is. And I was all over the show in the media last week talking about economics, markets, and particularly post the rate rise. Let's have a listen to bits when I was with Jeremy Vine on BBC Radio 2 talking about this. Turn your volume right up.
Vicky Price joins us, Chief Economic Advisor at the Centre for Economics and Business Research, and Jonathan Davis is on the line, Economist and Wealth Manager. Vicky Price, what do you think?
As we've heard, it was widely expected, but I think it was the wrong move. The economy is showing all the signs of slowdown coming. And of course, the Brexit uncertainty we've just been talking about is adding hugely to businesses' unwillingness to invest. And the consumer has been suffering from a decline in real disposable incomes now for a number of quarters. We've seen already that retail sales are being affected by this. The consumer is now focusing more on buying essentials rather than luxury items or things it doesn't need, such as cars, for example, or replacing their cars. And even in manufacturing, which is doing better than would have been the case otherwise, given the fall in the pound that we have seen since the referendum. There we've seen car production, for example, being really quite low, and the overall balance of payments and the sort of deficit that we had traditionally has expanded rather than declined.
So you think it's a bad move because it's going to hurt people. Jonathan Davis, you think it's a good move?
Short term or small picture, I think actually it's a reversal of the mistake a year ago when they cut the interest rate. There was no reason to do so. And big picture, the government and central bank policies of bailing out the banks nearly 10 years ago, zero interest rates practically, money printing and so on, it has created the most inequality in wealth and income that we've ever seen, and B, it's created the lackluster economic growth that everyone's talking about. So if this is the start, potentially over the next few years, of a reversal of those policies, power to it, bring it on.
Vicky.
Well, funnily enough, if you look at the data, inequality has been reduced since the financial crisis. And of course, it has been reduced. If you look at the figures that have been coming out of the Office for National Statistics and others who've been measuring it, including the Institute for Fiscal Studies. Because remember, there are loads and loads of young people and who are buying homes who have benefited from very low mortgages, loads of people benefiting from low interest rates, the ones that are barely managing. They actually found all that to be a huge benefit. And without the quantitative easing, the extra liquidity in the system, and the cut in interest rates we've seen, we wouldn't have been growing. So
these loads of young people who are buying homes, I haven't met any.
There are loads. If you look at the new buyers, yes, I'm not suggesting that home ownership is anything like what it used to be before, but for anyone who has had a mortgage, and quite a lot of young people have had mortgages as well, and also those who, as we said, are on median incomes, they have all benefited very significantly from low fixed mortgages, which wouldn't have been the case otherwise, very cheap loans to buy cars or anything else that they needed. So, but if we look at the overall measures that the Bank of England has put in place since the referendum, they have eased the concerns about a financial crisis that we all thought was going to happen and allowed the consumer to go out and spend. Without that, we wouldn't have had the growth that we've had.
But that's the key thing, Jonathan. They've released money into the system when we had a massive crisis, and maybe today is the moment we say we finally put the crash behind us.
The god of those people's economics, John Maynard Keynes, defined the Depression as an extended period of slow or no growth, with the biggest economic stimuli in human economic history. All we're getting is about 1 or 2% per annum growth. We're getting the rich getting richer, we're getting the middle class poorer, and we're getting the poor going absolutely nowhere. The idea the inequality is falling is such balderdash. It's unbelievable.
You just have to look at the statistics, I'm afraid.
Rising inflation because the central banks have kept interest rates too low for too long. Thus, oil and other base metals like copper and energy, they've been soaring on world markets. For example, in the last year and a half, the price of oil has gone from $26 a barrel to $54 a barrel.
Vicky wants to come in.
As far as I can tell, it's going to the 70s by next year.
Right. I mean,
we have higher and higher inflation because of low interest rates. The people who have to pay for this are the middle class and the poor. The rich don't really care much oil is, but we do.
Okay.
And we're the one paying
Go
for
on,
it.
Vicky.
Okay, well, the world economy has enjoyed a very long period of very low inflation, partly because of globalization, partly because until recently oil prices were coming down through the period of very low interest rates, so that argument doesn't hold at all. In addition, the inflation rate we have here in the UK has got nothing to do with the 0.25% interest rate we've got. It has all to do with the fall in the pound, which has increased prices of imported goods. We are an open importing economy. We created it by voting to leave the EU.
Oh, he thinks the pound fell because we had low interest rates.
Nothing to do with that. It fell
Really?
because, imagine, reducing the interest rates by a quarter of a point makes very little difference. What actually made the difference on the exchange rate is the realization of the markets that the UK was moving into a slow growth environment and therefore was going to be suffering in terms of what it would be doing on its balance of payments side. So they sold the pound.
Jonathan, I started with Vicky. Let me finish with you. What if you could do? What if you were in charge today, Jonathan? We've had the Defence Secretary resign. Maybe there will be a vacancy for Chancellor later. If you were in charge today, what's the single thing you'd do?
The single thing I would do is I would announce to the world that we will no longer bail out failed businesses. And that has so many repercussions to rebalance the economy to benefit the poor and the middle class.
Thank you very much, Jonathan Davis, economist, wealth manager. Vicky Price, chief economic advisor at the Centre for Economics and Business Research, talking about the rise today in interest rates.
Don't forget to turn your volume down. So the cronyist economist believes that inequality hasn't risen. Can you believe the gall of these people? The fact is, they get invited on the BBC, onto Newsnight, onto Question Time, onto the Today programme, etc., and they're fawned over and loved and treated like kings and queens, and never actually challenged, because that would require the interviewers, A, to know what the heck they're talking about, and B, not to be cronyists themselves. So they make these statements, these cronyist, socialist, fascist indeed, because that's the next stage if you think about it. Economists talk about the most profession which has been shown to be so disreputable for many years. Economists. That's how these economists act. They make these statements without anyone ever challenging them. And of course, what they can't do is back them up sensibly. She's talking about young people buying houses. Apparently, that is increasing equality. Yeah, someone taking out a £300,000 debt, that's increasing equality. These people are mad. So, the issue indeed is not that the rate rose. The issue is that, as I've been talking to you about for months, we now have inflation. It's likely to be embedded, although that is not yet guaranteed. I'm going to be talking about oil later on in the show. And interest rates and inflation will rise for years. There is, as I say, however, still a question over whether or not we're turning Japanese. For 25 odd years, they had effectively deflation, zero interest rates. The stock market tanked 80%, houses tanked 60%, more indeed in Tokyo. So I don't know if we have moved from 40 years of falling inflation, falling interest rates, rising lending, to, if you imagine a curve going down and now going up, having based, to an era of rising inflation, rising interest rates, and falling lending. Now, if we have, well, can you really imagine, for example, house prices doing well in an era of rising interest rates? I mean, we've had practically zero interest rates for years, and all they're getting is 2% per annum house price growth. What's it going to be with 1% interest rate, 2%, 4% in a few years' time? If, on the other hand, we are turning Japanese, then I can tell you it'll be even worse for house prices. Either way, the economy is not looking good for the longer term, whether we're turning Japanese or whether we move to sustained rising inflation. We are in, as John Maynard Keynes aptly defined it, we're in an economic depression, an extended period of slow or no growth. And that extended period doesn't stop next year. On the contrary, it started in 2008 and it will probably go on to 2038. Mark my words. Make sure you are properly invested, and if you're not yet retired, that your income is secure. I don't know what that means for you to secure your income. But if you're employed by someone, you do what you need to do to keep your income. If you are self-employed, then you do what you need to do to keep in business and keep self-employed. The other thing that happened last week, as I think I mentioned to you in the Bimsmush show last week, was that Donald Trump was to announce his nomination for the chair of the Federal Reserve, the central bank. It's a nomination because it has to go through Congress, and they've got to have the circus of the representatives, in other words, like the members of Parliament and the senators, question the candidate. The candidate will pass, and the candidate Powell will pass with flying colours. Why? Because Jerome Powell, is a massive, massive insider. He is the swamp. He is ex-Treasury, ex-banking. He is a total and utter crony. He's worth over $100 million. A public servant is worth over $100 million. It's a total joke. This guy has never dissented from the majority in the time that he's been on the Federal Open Markets Committee. And he will continue what Greenspan, Bernanke and Yellen have done for the last 30 years. He is a disciple of low interest rates, easy money, and he will bail out left, right and centre when he is called upon to do so. And I've said for ages, and I'm pretty sure I said it last week, Trump obviously would have gone for someone like that. The idea that the likes of James Rickards, who many of you will know, or the Societe Generale guy, Albert Edwards, or other commentators on the doom and gloom side of things, the idea that Donald J. Trump would have gone for what they call a hawk, a guy who was anti-inflation, was pro-sound money. It's just an absolute joke. Why do you listen to these people? Powell will continue what has been for 3 decades. And that is another reason why the world will head towards inflation, probably, and higher interest rates. Does that contradict what I've just said about he loves low interest rates and easy money? No, not at all. Simply that inflation will take off faster and the Fed will raise interest rates far slower than the rate of inflation, thus allowing inflation to rise faster. In other words, there will continue to be negative global interest rates for as long as you can imagine. And so long as Powell plays the game, he will be the Fed chairman for for the next 8 years. Trump is still to nominate another 3 members of the Federal Open Markets Committee, including the deputy chairman. And indeed, we've just heard this weekend that the head of the New York Fed is retiring, Dudley. Basically, the New York Fed runs the Fed, along with the and the deputy chairman, and there's one other who I can't quite remember, but basically 3 or 4 of them run monetary policy in the United States. It's not the wider Federal Open Markets Committee. The others are also RANs. And there are 12 Feds, regional Fed offices around the country. Total joke, because there's only 2 that matter. The one in Washington, and probably more important than that actually, is the one in New York, which is working in cahoots with the banks. Because remember, and some of you will be aghast at this, and many of you will already know, who owns the Federal Reserve of the United States? You think it's the federal government? You think it's the regional governments? Then you're even more naive than you look. The banks of Wall Street own the Federal Reserve. This is not tinfoil hat stuff. This is not conspiracy theory. The banks of Wall Street own the Federal Reserve. Hence we have what we have. Let us move on to Donna Brazile, who was until recently the chairperson of the Democratic National Committee, the Democratic Party in the United States, for 5 years. And she went through the process of nominating Hillary Clinton to be the candidate for the presidency in the 2016 election, which we now know Clinton rigged the nomination. How do we know that crooked Clinton rigged the nomination? Because the chairperson, Donna Brazile, is telling the world this is what happened. And she's telling her how Clinton rigged the election. Apologies. Crooked Clinton. I must remember never to call her Hillary Clinton again. Always Crooked Clinton. And what are the Clinton team now saying about Donna Brazile? Listen, the chairman for 5 years of the Democratic Party. The chairman of the party for 5 years. They're now saying that Brazile is a Putin pawn. Clinton and her people are obviously fascists. And I thank goodness, whatever goodness may mean to you, that she did not win and did not become President of the United States, the most powerful political job in the world. Because if she did, that would quicken the pace that America moves to fascism. Talking of fascism, so 8 of the Catalonian secessionists' leaders have been jailed by the Spanish government. We're not talking about terrorists. We're not talking about political activists who have created acts of, for example, terrorism, barbarism, or even criminal damage. We're talking about political activists who got 2.25 million people in a region of Spain to vote and express their democratic feelings. They have jailed 8 of the leaders. They have put out a European arrest warrant for the leader who is seeking political asylum in another European country, in Belgium. The European arrest warrant was not designed for this. It was designed to repatriate murderers and rapists, not freedom fighters using democratic processes. The Spanish government has dissolved the Catalonian regional government. It has called new elections. It has imprisoned this is Spanish democracy in action, supported by the fascist European Union. This is yet another, for the 1000th time, this is yet another reason why we desperately need to leave the EU by March 2019. The Kingdom of Saudi Arabia, in the last 36 hours, has arrested more than a dozen Saudi royals and imprisoned them in some hotel in, I think, Riyadh. They have confiscated the holdings of these guys, including that of Walid bin Talal, who is worth at least 20 of your $1 billion. And he is the biggest shareholder in Twitter. He has shareholdings, sizable shareholdings, in Rupert Murdoch's News Corporation, which owns the Washington Journal, I think also the New York Times, the Fox TV network, and of course Fox Searchlight movies. And he also has a major holding in Citibank, one of the biggest banks in the world. It is estimated that the Crown Prince of Saudi Arabia has confiscated hundreds of billions of dollars of assets of people who lived and worked in his country. Also, a helicopter carrying 8 other Saudi royals has crashed and they all died. This isn't the Middle Ages, apparently. Because apparently the West and even parts of Asia and even parts of Africa have moved beyond the 15th century. But much of the Middle East has not moved beyond the 15th century in its thinking or its actions. And I remind you, if any of you still have any doubts about one of the smallest countries by landmass in the world, and yet one of the most talked about, you know there's only one democracy between Europe and India. Work it out. This is what's happening right now in October, November 2017. Today, and I haven't mentioned it yet, today is Monday the 6th of November 2017. It is a truly awful world we live in, where you get fascism all over the place, and you get the likes of Julian Assange, who released publicly available information about wrongdoings by Clinton, Obama, and the US government. And he's being held against his will. And then you get the likes of Clinton, who destroys public data that was held on her own servers. And we all know that it happened. And they wanted her for president. This is the sci-fi dystopian future today. Look at the charts when you see the tweet on the @BoomsBustShow Twitter account. Look at the charts of household income in 2014 dollars, prices in other words. You see the middle income is between, what's that, about 30,000 and 80,000. Middle income has gone up to about 40,000 to 130,000. We think that's not bad. In 44 years, in real terms, not much of a difference, but look at where the money is really gone. The top $200,000 earners was 1% of America. It's now 7% in real terms, in inflation adjusted terms. And look how the columns have fallen dramatically. Whereas previously, for example, the middle income peak was at about 40,000 a year, and that was about 6.5% of the population. Middle income peak now is at about also $40,000, and that accounts for 4% of the population. Don't tell me that they aren't taking everyone for an absolute ride. Let's listen to Carol Malone, who is one of the doyens of the newsprint industry, and she's trying to make it in the broadcast media as well.
I make no apology for what I'm about to tell you about ISIS, about how they rape and torture women and many children, many as young as 8, how they bury children alive, crucify them, use them as suicide bombers, how they hack men's heads off, how they burn them in cages, all in the name of religion. Yet Max Hill QC, the independent reviewer of our terror laws, reckons jihadis returning to Britain shouldn't be prosecuted because some are, quote, naive, disillusioned teenagers. No, they're not. They're heartless killers who made a commitment to murder, maim and destroy the West. If we must take them back, we should confiscate their passports and prosecute them as the terrorists they are. The SOFAN Centre, which studies security around the world, says returnees, 5,600 from 33 countries, will present a global threat for decades to come. The only naive people here are those who think you can rehabilitate murderers prepared to die for their twisted Islamist ideology. I don't actually care what happens to them. I just don't want them here on our streets, poisoning young minds and killing our kids.
What can I say, Carol? I hope you make it in the broadcast media. Oh, I need to get my breath back. Isn't there an awful lot going on? The Donna Brazil shenanigans, the chairwoman of the Democratic Party, the Kingdom of Saudi Arabia, Catalonia, base rate rises, inflation. You know, I feel like going straight to oil, so that's what I'm going to do. Oil, as I've said many times, March 2016, $26 a barrel. Today, it's 2:40 in the afternoon as I'm recording this. Oil has been $56 a barrel. It's just over 55 and a quarter at the moment, but it's more than doubled in the last year and a half. And yes, as it happens, the shenanigans going on in the Saudi Arabia, actually, the press and the media will be saying that buy oil, oil's going to go up, look at all the nonsense going on in Saudi Arabia, blah, blah, blah. Now, actually, this is probably the point at which we see a sizable pullback in oil. Funnily enough, that's the way these markets work. But I would expect oil to bottom, if it pulls back at all, around about $50. And I think we're then heading to the 60s, and probably by late next year, maybe 2019, into the $70s a barrel. Practically a trebling from early 16. There's your inflation, folks. Oil is the biggest contributor to our inflation. That's the reason why we are likely to have embedded inflation for the next year or two, and why we're likely to have another 3 or 4 or 5 quarter% rises in the base rate between now and a year and a half from now. Now think about this. We're back at 0.5%. I can absolutely reasonably expect 1 or 1.5% by early 2019. And that will coincide probably with circa 4% inflation. And then 5 years down the line, I think we've got to be looking at somewhere between 5 and 10% inflation, which means we're then looking at 3 to 6% base rates. Mortgage rates of, what would that be, 5 to 8%, give or take. I think that's highly reasonable. And if they're only getting 2% house price rises and you can borrow at as low as 1%, what's the house price market going to do with interest rates of 3 to 6 and mortgages of 5 to 8? Well, this is why I say to you again and again and again, it seems to me that we have seen the peak of decades of rises in house prices. At worst, or at best, should I say, house prices will not fall in inflation-adjusted terms, in real terms, for decades. But at worst, or at best, depending on your point of view, I believe that we will actually see house price falls for decades. That's what I expect. Whether we see sustained inflation for years or we turn Japanese, and that's the point. Thus, we're in an economic depression, which doesn't mean that you have to have the GDP falling every year. No, it just means an extended period of slow or no growth. And that's where we're at. Have you yet subscribed to the Booms and Bust report? Well, I think you ought to. Just send me an email to jd@theboomsandbustshow.com. I say, if you go onto the Twitter account, you see the pinned tweet of this show. You'll see charts and pictures of what I'm talking about on this show today. You'll see a tweet there if you scroll down referring to the iTunes page. I would really appreciate it if you would simply click to that page and star rate out of 5 the show. The more people who rate it, and of course if it's got a pretty good star rating, then the more people get to hear about the show. If the same people listen to the show week after week, first of all, yes, I'm very happy about that, but wouldn't we all rather that the message get out to more and more people? And the only way that's going to happen is, well, there are 2 ways really. One, we tell people on iTunes by star rating it, and it would be fantastic to see 100 star ratings on there. And secondly, if a lot of you would be so kind as to simply retweet the tweet of the show. just retweet the pinned tweet. That's all I ask of you. A simple retweet. Because that way the people who follow you on Twitter will see what you're listening to. And some of them will be interested to know more. I feel that I've covered economics sufficiently. So I'm going to go straight to markets. I've already talked about oil. I mentioned US natural gas last week, and it seems to be building a very strong potential base. I talked about a couple of gas producing stocks taking off. I said to you, someone knows something. And sure enough, it seems to have taken off now. Gas is up over 2.5% today. As I speak, it's the start of the trading day, however. So, the start is far less important than the close of play. And indeed, the close of play on Friday, the end of the week, is far more important even than the close of play on the day. But it does seem as if US natural gas is heading for a sizable rally. You might want to keep an eye on one particular stock, Sotheby's. The ticker is BID, B-I-D. What a great ticker symbol. And when you look at, you can see it on Yahoo actually, or something like stockcharts.com, I imagine. Although I don't know if you can change the term on stockcharts.com. If you put in a very long-term chart of BID of Sotheby's, the international auction house, you will see that it correlates very highly to the wider stock market. It goes up when the stock market goes up, and it goes down when it does, and so on. And it fell over 3% on Friday, and that's one of the stocks that I look for to give me an idea as to what might be going on in the wider market. And of course, Sotheby's is involved in very high-end purchases, so classic cars, furniture, property, I imagine, fine art, treasures of all kinds, and quite simply, if the top end aren't doing as well as they were, if there isn't a huge amount of liquidity in the system, then that is what trickles down to everyone else. The wealth doesn't trickle down to everyone else, but the lack of liquidity certainly does. So you should keep your eye out on Sotheby's. This is going to be a bit of a shorter show today. I've only got a couple of other things to talk about. First of all, uranium miners. There is a very interesting chart. Very, very interesting indeed. I've been strongly bullish on uranium miners since I've started the show. It hasn't made us any money yet, being the operative word. But I say to you, both the fundamental story and the technical analysis says to me that this is one of the assets that wants to fly. Look at this technical and this fundamental analysis. We are seeing right now the amount of power being generated in nuclear generators, nuclear power stations, overtaking the production of uranium. And that hasn't been the case since the market crashed in 2011. Now, very possibly the market crashed in 2011 because of Fukushima. But for the first time in, what would that be then, 6 and a bit years, the production of energy has now finally overtaken the declining production of uranium. Now, if that isn't a bullish story for the price of uranium, I don't know what is. And when you consider that the index of uranium mining stocks was 10 times where we are today 6 years ago, it seems to me there's money to be made in them thar hills. Gold. Talk about it every week recently. It's truly in no man's land, and yet silver, the price of silver, which tends to lead the price of gold, has been in gentle uptrend, not in a straight line, but up and down, but with higher lows since December. And when I say lead, what I mean by this is, if silver rises on a trend basis, then gold normally will follow. And similarly, if silver falls. We also want gold miners to fall into line. And if they do, then you can accept the trend. Miners are broadly flat, slightly up also. But there's no question precious metals are no man's land. Or indeed, we don't know if they're still in the bear market which started in 2011. It's all about the dollar and yen, folks. When we see the dollar rising against the yen, that tends to be bearish for precious metals, and vice versa. Also, we should be looking at real interest rates, and I tend to gauge that when I'm looking at my charts. When I look at the comparison chart of index-linked government bonds, the ticker symbol being TIP, TIP, to government bonds, the ticker symbol being TLT, long-dated government bonds. And when I see TIP to TLT rising, that's bearish precious metals. When I see TIP to TLT falling, that's bullish precious metals. Real interest rates means that interest rates are lower than they should be to curtail inflation. In other words, inflationary. They're actually pushing inflation. And TIP to TLT has been broadly flat. There's basically a horizontal since looking at the chart, since the middle of June. It's gone nowhere. At a fraction of 0.92, and we're currently at 0.9. So it's hovered between 0.92 and 0.89 since middle of June. So what's that? July, August, September, October, 5 months. And understandably, silver also has done nothing in that 5 months period. And I think probably miners and gold as well. Yeah, sure enough, they've done nothing in that period. So we need to see a breakout, either to the upside in TIP to TLT, or to the downside. If we see a break to the upside, it's hugely bearish precious metals. If we see a break to the downside, it's very likely hugely bullish precious metals. We're in no man's land. In Twitter land, there are huge bears and there are huge bulls. I'm agnostic. I don't really care where the market goes. What I'm saying right now is nobody knows where the market's going. The market is horizontal and has been for months. Got a couple of kind of quotes to end up with. And, my favourite guy, you know who I'm talking about, Thomas Sowell. He says there are 3 questions that will destroy most of the arguments of the left. 1, compared to what? So whatever they say is socialism is good, the EU is good, bailing out the miners, bailing out the steel workers, minimum wage, living wage, more social benefits, more NHS, whatever it is, just say to them, compared to what? That should shut them up, or they'll either start shouting at you as a fascist, a Nazi, or they'll just make rubbish up. Secondly, respond to them with whatever they say. We should do this, we should do this, we should do that, we should do that. Respond to them with, at what cost? They've never costed these things. Never. And thirdly, if they do happen to have research, and thirdly, if they do say something and they give you a cost or an argument or a backing, ask them, what hard evidence do you have? They normally have no hard evidence. It's just what some other socialist said, or they heard in a socialist meeting and everyone went, yeah, as if it's true. Socialist meetings are like Twitter. You get, 100 people liking it, but no one actually knowing whether or not it's true, just believing it. It's like they believe in a higher power. What hard evidence do they have? If they do happen to produce something which they call hard evidence, it's produced by another socialist, by another lefty, by another academic, or a George Soros kind of person. Compared to what? At what cost? What hard evidence do you have? I'm going to finish off there, remembering the greatest. I am the greatest boxer of all time. Cassius Marcellus Clay. Cassius Clay, who was named after a slave abolitionist who freed his inherited slaves. He didn't buy slaves. He inherited them. He then freed them. When he was given control over them, he freed them. Cassius Clay changed his name to Muhammad, a slave owner and slave trader. And on that note, so we've had an interesting time at Davis Towers and in the Davis organisation. Some of you might remember from a show long time ago, I told you about us getting an order in for liquid petroleum gas supply to heat our home and for the oven and the hob. What I didn't tell you was that there is something which you namby-pamby city folk don't have to do. You don't have to check the gauge for when you need to reorder for the supply to be topped, for the tank to be topped up. Unfortunately, literally today we noticed that our tank was practically at zero. So we will run out of gas this week. It will be delivered probably on Thursday or Friday. So that's fun. That we're back to convection heaters and log fires. Oh my goodness. And secondly, I noticed what I thought was a spurious email to that was sent out by a colleague of mine this morning. And that set off a whole chain of events that with the support of our IT guys, it transpired that our email system had been hacked. I was under the impression that we had a NASA level security system. Well, clearly, what we have is a Camberwick Green level of security. And for those of you who are under the age of, what would we say, probably 50, Camberwick Green was a mythical a village in kids' TV for under fives decades ago. And we've sorted the problem now. We've changed all the passcodes and all that kind of stuff, and we've tightened this and tightened that. But it's pretty scary, lads and lasses. Check your passcodes, check your passwords. I cannot emphasize it enough. On that note, have an absolutely fantastic week, and I'll see you next week.